Well, hello everybody, I'm L.A. Little, and this is your daily NeoTA wrap. We take a look at these markets. We do it from a neoclassical perspective. Each time we ask ourselves just one question. What happened today? And what does it tell us about the coming ones? We do this show 4 times a week, Monday through Thursday, broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube under the channel L.A. Little. If you want to subscribe, anytime content's pushed, you'll be notified. That's a nice way to keep up with what's going on. And what is going on is more pressure to the downside today. We actually saw it spread today to the NDX, and we haven't seen that in a while. 45 points percent down. We had about 0.5% down pretty much everywhere else. Composite also, taking the hit. What can I say? Market wants to break out, can't break out. Market wants to break down, can't break down. Range trading, and we're still range trading. Now, it's getting a little bit more interesting now because when the range trade initially starts, and we'll use maybe the DAX or something like that to look at that, and we'll do that here in a second. It's a little easier at the very beginning, and then it gets a little bit harder to keep up with what is happening because you get range expansions or potentially contractions, and you have to judge those and judge whether or not they are significant or not. And that's one of the hard things about trading ranges, is deciding whether or not it really is still a range, because those ranges can expand and can contract. So we'll look at that tonight. If we look elsewhere, pretty much green in the interest rates on the short end of the curve. On the longer end of the curve, still struggling, and that's because of the employment numbers and the idea that we're going to see interest rate increases on the long side of the curve. UUP, well, actually, you're going to see it on the short side, but you're getting a steepening of the curve. The UUP, the dollar, 1.15% down. Euro was up big today. That kind of flies in the face of the bonds, and so something here is a little awry because usually they don't do the same thing. We'll look at that a little bit, but really the focus here tonight probably needs to be on the indexes and what's happening there. But before we cut to that, what I'd like to do is give you an overview of what's happening in general with respect to the trends in these various indexes, because I think that's important. And I have a little place here on the site. If you pop into the site, you come to the resources, current trends, market trends. You can get to this page, and this page essentially gives you the intermediate, short, intermediate, and long-term trends on the general markets, on the major indexes. And so if we look at that, the thing that's important here, and that the reason for bringing this up, is typically what happens with trends is that once you start to move 2 or 3 of these, in other words, 2 of these, let's just say they're all bullish. Once you get 2 or 3 of them to go to sideways, then most of them are going to go to sideways. Once you get 2 or 3 to go to bearish, then most of them are going to go bearish. And what we're starting to see is exactly that taking place on the downside, and that is that, energy's been bearish for a while, but now you got let's see here, we got staples joined it. We already had utilities there, right? Basic materials go sideways. Technology goes sideways. And you can see the transitions to the downside. And you can see them also starting to take place up here where the S&P is going to the sideways. The Dow has gone sideways. As of tonight, the NDX will go sideways. IWM just went to sideways. It was bearish. It actually reversed. And so you can see kind of the deterioration that's starting to take place in these. And if we actually looked at the sectors tonight, what you would see tonight is that the XLK actually breaks again. So that goes to a bearish trend. The XLV goes from bullish to sideways. And the XLI is just about ready to do the same, and it will be moving from bullish to sideways. So you can see those trend transitions more and more negative, and that's a bad thing in that it's getting more negative, but in a way it's a good thing too, and I'll explain that as we go along here. So let's go pop into the indexes and take a look at those. And so let me grab those right quick, and we'll pop over there. And let's just start with the S&P 500. So let me go get that. So if we come into the S&P 500, now this one is a little bit different. Let me go to the NDX first. So on the NDX, we're going to break tonight. We broke on a swing point low. What this means is that you had to travel a good distance, right, to get down there to break that. When you get that trend transition starting to take place on the indexes, on the sectors, and most of them actually transition, for example, if I look at the broader composite, it tested today but did not break. Once it breaks as well, usually you're towards the end of the trend on that time frame. And what I mean is that you've stretched enough to the downside at that point that you're probably going to get some sort of a bounce, and then you have to measure what those bounces look like. And so if you remember, we kind of have a broad range that's been taking place here, and if we just draw out the big one, it's up here. And then inside that, you kind of have other ranges that are taking place, and this one's coming down towards the bottom end of that range. And as it does that, and actually if I had drawn this correctly, this would actually have been to about there. That was the original. This was kind of outside of it. So if you look at it from that perspective, right, you're actually getting on this case, right, you're getting towards this end of the range, and you're probably going to see a bounce out of that, right, because it's extended all the way down there. And in this case, you went it's not a huge amount, but it's an extension to the downside. Volume still not heavy. That's could be interpreted good or bad, but what I'm seeing is this come down to the bottom end of the range. It's where you would expect to see the bounce. If we go back to the S&P 500, this one is definitely extended. Coming down to these two swing point lows, that would actually transition it to bearish if it were to break. And so to do that, you would have to break this guy, which is 2072. We're sitting at 2078, I think, 2079. So we're only 7 points away. So we could get that break tomorrow. And going back to the NDX broke today. And the NDX is going to drive a little bit lower potentially into the support zone. Major damage? No. Minor damage? Yes. Is it is it horrible? No, it's not horrible. I mean, it's a range. It's been a range. It continues to be a range. What's more concerning is not here, it's over there, because over there is what's driving us. And when I come back, we'll look at over there, and we'll look a little bit deeper into what some of these things might mean for the coming week. I'll be right back.
Learn how to trade with the Trade with LA service provided to you by TA Today. This service includes daily portfolio and comments that are emailed to you before the market opens each morning. We provide a daily view of the markets and a model portfolio you can follow even if you work another job. Every weekend, LA records his weekend broadcasts that gives you a synopsis of the week and a prognosis of coming weeks. You will also have access to our Teach and Trade room, where LA provides day trades and teaches neoclassical concepts throughout the trading day. To get started, go to our homepage and click Trade with LA.
So as we come back here, we turn our attention to the CACs, we turn our attention to Europe, because Europe is really what the US is trading off of, more so than what's happening in Asia right now. And in particular, we keep focusing on the CACs and the DAX, so the French and the German markets. Well, today the French market breaks a swing point low. So we get up underneath it, right? Break under it. We got no volume down here, so it's a suspect break. It's extended already, right? There's an ABCD structure that's in place. It looks like it's just about done. I'd have to do the actual measurements, but you're pretty close. So you've extended, and this is what I was just talking about when we were looking at the other charts, and I was trying to talk about the extensions. So you break, you go bearish here, you're trying to go bearish again tomorrow. That extension probably is going to lead to some sort of a bounce. in this market. And if you just look at it in terms of the numbers, you've dropped from roughly 5,200 down to 4,957. So you've dropped a good 250 points. That's representative of a fairly significant percentage drop on the way down. And so to expect a bounce here is probably not to expect too much. A lot of this has to do with what's happening in the euro. The euro's strength today continue to put pressure. But then a lot of it is just the Greek situation and what's happening or not happening in Greece. Now, if you pull this back and look at it in a little bit longer term frame, it is a range, and that range has been right there, right? And so it's right at the bottom of the range, just getting under it tonight. Tomorrow's kind of a big day, if you will, because tomorrow you're going to find out whether this range really extends to the downside or not, or whether you're just testing that downside, bottom of the range, and you're going to bounce back the other way. So that really is the issue. As you come down, as volume shrinks as you come down, which is what's happening so far, the expectation is this probably is going to try to hold the range for now, and then we'll see on the next trip down, right, will it be able to actually break. If we draw in the lower quadrants, if you will, and look at what those look like, right, and if you extend those down, right, you could see it getting into the top of this bar. That's probably where it's heading if it really is a longer range. That's another 200 points down if that fulfills, and so another significant percentage. If you also look at it on this time frame, I mean, I'm making all the bearish arguments right now. You could see an ABCD structure also that could complete to the downside, which would also drive it lower. And so you can see a lot of things that can point to lower price if this is going to do a continuation. How is it going to do that? What's going to drive it? Well, I think it's going to be geopolitical, economics related, probably Greece, maybe the euro, maybe the bonds, all of those things working against these markets right now. If those were to continue get worse, then of course you could potentially see that. I don't see, unless volume really picks up, I don't see us breaking this bar with volume, so it would be a suspect ABCD down if in fact that's what it did. Let's look at the DAX next though, because the DAX is actually broken more deeply. Volume still small, so it's going to trend transition, a reaffirmation, but suspect this time. And again, pulling it back and looking at it here, it's at the bottom of where it can go probably, and if it's going to bounce, it probably needs to bounce here. If not, you come back to these breakout areas from before, and then that's going to be the significant area on the way back up. So to me, right now, I don't know that you want to call it a range expansion. If you get another day down tomorrow, and especially if the volume starts to pick up, then I would probably be more consistent with the ideal of a range break and expansion to the downside. And so that's where these sit tonight. I think so much of what we do is going to depend on what happens here. There's really not much news coming out overnight. They're certainly still having meetings with Greece, and the news flow with the Greek situation is if something does happen positive, this market's probably going to rally. If you get a negative one, then you still can fall farther because I don't think it's priced in on either side at this particular point. If we look over in Asia, even though Asia is not driving us, we do need to pay attention to it. The Hong Kong market, the Hang Seng, still hanging up here, still doesn't want to give it up. You've got some real strength still taking place. That's probably the target area if and when we get some sort of a pullback. But you got some real strength taking place in Shanghai. Volume expands again, new highs. This thing's trying to push up to targets around 57, 5,800. It's sitting at 51.5. You've got an inclusion-exclusion decision in the MCSI or MSCI, I believe it is, emerging markets. And if this gets included, you can expect even more of a rally. I think that decision is tomorrow night in China. Not in China, but with the MCSI. So that's continued to drive. I mean, everything I look at in this market is still positive. I don't see any negatives here. You got the ABCD structure on the way up. It's just about done on this time frame, so I wouldn't be surprised to see some sort of a nested, ABCD structure come out of this, which eventually drives it to that 5,800 number it's trying to get to. Where does that number come from? Well, it's not on the weekly, although I guess actually you could get it on the weekly now, the way the weekly is laid out. It's definitely on the monthly. The 5,800 target is there, but now you actually have, it looks like, the confirmation here to drive you to that same area. So everything seems to be pointing to the same place and pointing to more up in a market that has seen plenty of up already. All-time highs, I believe, around 6,100 in this particular market. Okay, so what else is there? I want to go to the ox markets quickly, and then actually let me take a viewer question first, and then we'll come back to those. So if you haven't asked questions, or if you'd like to ask questions, it's pretty easy. If you just come over to the website, pop down here to the NeoTA TV. Once you get in there, there is a place a little lower right here where you can send emails, ask questions, or you can actually text and have your questions answered. Coming back to the question, has to do with AVNet, AVT. The question was pretty simple. It says, just wondering about this on a daily chart. Would this be a good time to go long? Looks like a low risk entry to me. What do you think? Well, yeah, I mean, it's not a bad entry in terms of low risk in that you don't have to risk a lot, right? But I always look at it from two standpoints, and one is, where would my entry be, and what is the risk reward scenario, which is what everybody always looks at, right? And then the other piece of it is, what's the probability of success? And that latter question is the harder question, but it's actually a crucial question that you have to answer as part of the question, right? In terms of whether you want to take on a trade or not. So you try to look for things like projections and see if there's projections here that allow you to know whether or not this thing is done. And so I'm drawing in some projections. You've actually got a couple nested ABCD structures. They both are or are completing right here. You've also got this volume low here that you're coming into. And so, from that perspective, all these projections and everything, yeah, it does look like this thing could certainly get a bounce. So then the next question is, okay, if it gets a bounce, where can it go? Well, notice what has happened, and it actually depends on what finally happens here. This is a swing point low, right? That's a swing point low. You've also got the volume on these two bars, right? That's what it's coming into now. That's where the support is. If this closes under the swing point low, then what you have is a retest regenerate, and that retest regenerate is going to be off of this bar. So when I look at this and I ask myself, okay, where could this thing bounce to? You've got resistance shown here, but I think, best case you could expect maybe that high. Okay, so if I buy it at 42.30, I could get I could get a $2 bounce. That's 5%. That's not bad. Where can I put my stop? Well, I could put my stop right up underneath, but I really need to look at the weekly chart. So if I pop over there and I look at the weekly chart, I notice that on the weekly chart, 2, 3, 4, 5, 6, if it doesn't get under this week, this would be a low, but it's probably not going to print a low. And you've got this big bar here down, right, that it's coming into. So on a weekly, I guess I could put my stop just up underneath this. So somewhere I'd have to figure out what the, I'd have to go over to Cube and see what my average true range is, but it's probably around 42 or so. Okay, so I can make all of those numbers work. What's the probability of success? So from a risk reward, yeah, it will work. What's the probability of success? Well, the thing that pops out at me, and the reason I probably wouldn't want to make this trade just yet, is this big bar down, right? Came up, tries to test to it, fails. That to me tells me that this stock probably isn't in an uptrend anymore. I kind of doubt it's in any kind of an uptrend. More than likely, this thing is getting ready to try to make some sort of either it's sideways or it's going to try to press down. And so I'm not too high on the idea that this thing is actually going to hold and going to get a projection back up. So I might lose that small risk trying to trade this. So if I'm going to trade this, the only way I'm going to trade it is let it test that low, let it get up underneath it and bounce back, right? And then I know when to put my stop. I know where my stop goes. And if that all happens on lower volume, then I know that I have a trade that has a better probability of rewarding me versus simply taking my small stop away. In this market, you don't want to get thrashed over and over and over. You'll sit there and spin your account and you won't have anything left. What you want to do is find high probability setups and trade those. This one to me is not a high probability setup. If I look at it on a weekly, it's kind of a sideways ranged at best. I think there's better trades out there if I'm going to pick one. Yeah, this one can make money, but the way I just explained it is probably the only way I would try to trade this thing. All right, let's go back to the OX markets because I wanted to touch on a couple things here, in particular the currencies. So going to the OX markets, I want to pull up the dollar to start with. So dollar had this big volume on Friday off the employment numbers. Now I've told you before, I don't pay all that much attention to these big volume surges on this particular chart, because it's an ETF. The Forex really is where the action is. But unfortunately, the Forex doesn't give you volume, so this is the best thing you have to work with, the ETF. What's more important to me here is not so much that bar, but this gap, right? This really shouldn't close this gap. If it closes the gap, that tells me that at best this thing is sideways, but potentially it's even farther down and could expand that range. That range we're looking at is the range that we have here on the weekly chart. That range, if you remember, initially we were looking at that range as a subset of two ranges in here that could expand, and it did expand. And so we actually got those three equidistant expansions. If this thing does close that gap, I think we could get another one, and that other one would take us back down into these tops right about there. And so I don't want to see that gap fill if I'm bullish on the dollar. If it does, I think you could come back into these bars right here, and before it's over, it certainly tests this low, but potentially if you break into quote unquote an expansion of the range, then you could test into those bars. So right now, that's kind of the critical question. If we go over and look at the euro, and the reason the currencies are so important is they're driving everything right now. If we look at the euro's pressing up. It's already closed the gap. It's pressing up there to test into those highs again. If we bring it over to the weekly, those highs are critical on the euro because it really defines whether or not this is going to be this type of a range versus the range we're in now. And the reason it could be that type of the range is if you pull over the monthly chart, right? That monthly chart, that breakdown area was this particular bar, and that was 118.46. And now if we come back here, you can see that takes you right up to about 119, 118.50, 119. So these, getting back into this higher range potentially can take you higher. And matter of fact, if you look at this closely, you can see there's kind of an A, B, C, D structure potentially here that could take you back to that same sort of range number. So this is going to be a critical push on the euro. It's going to define whether this euro expands that range, trades back to do a bearish retest and then regenerate lower, or if it's not going to get back up there. Right? That's going to be, this is the bar, this was the breakdown bar right here. That's going to be the retest regen bearish if it can get up there. Right now, it's having a hard time getting there, but if it starts to move above this area, and let me go grab the chart again, if it starts to move above these highs, it has a shot at that, and that's what we're really looking at here. Why is that important? Well, if the euro moves higher, European markets are going to struggle. If the euro is still range bound, those European markets can actually lift. And so the European markets lifting probably helps us lift. You know, they're all tied together at the hip right now. Where do we stand for tomorrow? Well, if we go back to the general markets here in the U.S., you know, they potentially can test some more downside, but as I said already, you know, what's important is what happens in Europe tonight. Is Europe going to expand that range or not? If they do, we will also. If they don't, then we'll come back. What's the odds of them expanding in Europe? I don't think right now they're that great, and the reason for that is right now you have suspect volume on the way down. So if I come back over here to the DAX, for example, you know, you're breaking with less volume. You're also extending on an ABCD structure. Those are getting close to being done, and you've been straight down. And so, you know, when you put all those things together, you know, more than likely you're getting close to the end here. There is some more room to trade a little bit lower, but after that, you know, if it does extend fully, you're probably going to get some sort of a bounce. And then, like always, the question is, what's the next retest regen look like? And that would be this one at this point. At some point, more than likely, this Europe market is going to find its complete range. And at that point, you're going to have a big range trade. And then you can actually see this market probably work back and forth within that range. Right now, this time frame, down. You look at just a little bit longer of a time frame. If we can get this back there. Here we go. Sorry about that. You got still an uptrend. So it depends on your perspective. What time frame are you working in? That's it for tonight, folks. I wouldn't be surprised to see a little bit more weakness, but I think we're kind of getting to the climax here on the short-term time frame. Get some sort of a bounce, and we'll judge the bounce like we always do to decide what's next. Shanghai, probably another day of up over in Asia. Until next time, I'm LA. That is and was your daily NeoTA wrap. Have yourself a great one, and I will see you tomorrow. Good night.